BNB has always been our most familiar stranger. Familiar because we all use Binance. Stranger because there are so many mysteries surrounding it. Did you know that in this bull run, BNB has already hit new all-time highs while most altcoins haven't? And did you know that Binance actually stopped buying back BNB quite a while ago? And here's another one. BNB has a capped de-inflationary model. Even crazier, it keeps burning, and the burn rate is insanely fast. So, why are there so many mysteries surrounding BNB? Is the growth healthy? Does it still have room to grow in the future? In this video, we're going to unpack all of these questions. First, let's start with token distribution. So if we check BSC's official data platform and look at BNB's distribution, we will see that top 10 BNB address gather hold 86% of the total supply. Now let's compare that to the top 10 holders of other coins. So for Bitcoin, the top 10 address hold just 5.5% of the total supply. For Solana, it's a bit higher than 6.5%. XRP isn't as transparent, but estimates suggest around 20%. And Ethereum is more concentrated, with the top 10 address holding about 61%. Now looking at these numbers side by side, it is obvious. BNB is extremely concentrated among its top holders. So, who are these whales? Why are they holding so much BNB, and are they all Binance-owned wallets? To answer that, we analyzed the top 10 BNB address in detail, and they fall into three categories. Category 1. High-frequency trading address. These wallets are very liquid. They buy today, sell tomorrow, and they are the ones that actually generate sell pressure. Among BNB's top 10 address, only one wallet fits its profile. The one ending in ACEC. After digging deeper, we found that this wallet is actually Binance Hot Wallet, used for daily deposits, withdrawals, and trading activity. So yes, most of the actual selling pressure on BNB comes from this address, but even then, it's still number 6 among the top 10 holders, with 6.7% of the total supply. Then there's category 2, low-frequency trading address. They are not very active, but they do occasionally move tokens. This includes the second, the third, and 10th largest wallets. Together, these three wallets hold around 30% of the total supply, and most of these tokens are tightly controlled by Binance, meaning they're not going anywhere unless Binance wants them to. Now, category 3, zero-movement wallets. These wallets have never moved a single token, and that includes the number 1, number 4, number 5, 7, 8, and 9 largest address. None of these wallets have any transaction history since they were created. In other words, they're a strongly locked address. The number 5 largest wallet is a bit different. It's a burn aka black hole address, holding around 10 million BNB. Now, some people might ask, BNB has already burned 60 million tokens, so why does the burn address only show 10 million? Is Binance lying? Well, not at all. Here's why. So the BSC chain has undergone multiple upgrades. Some of the early burns happened on the old BNB chain, or during the ERC20 era, when tokens were burned directly on the ledger rather than sent to burn address. In April 2020, when BNB upgraded from BEP2 to BEP20, which is the BSC chain, about 150 million tokens were mapped over, and that total had already accounted for earlier burns. So what do we learn from all this? There's two key takeaways. First, BNB's market cap is bloated. On mainstream platforms, BNB's total market cap looks massive, but in reality, most of these tokens are either burned, locked, or in cold storage. That means the real circulating supply is less than 1/10 of the total supply. That means it's relatively little capital to push the price up sharply. And with tight float and heavy control, BNB is one of the easiest major coins to pump. And that's the reason why the price tends to rise more steady. Second, BNB's price action follows two rules, and they are trust and supply demand. On the trust side, Binance has strong control of the float. As long as Binance stays solid, BNB is unlikely to face major problems. On the supply demand side, sell pressure mainly comes from the exchange wallet and a few whale wallets. On the demand side, the key driver is a burn mechanism, including the black hole address and BNB's structured burn rules. Once you understand the dynamics of trust and supply demand, you can basically predict BNB's price movements. Now let's break it down step by step. First, let's talk about trust. To understand the deep connection between BNB and Binance, we need to rewind to when BNB was first launched. Back then, BNB was just a utility token issued by Binance Exchange. Its only purpose was giving traders a discount on trading fees. But as Binance grew and regulatory requirements become stricter, BNB's role had to evolve. Its identity was separated from the exchange. Now, BNB is a native token of the BNB chain with all the basic functions of a blockchain token: the on-chain transfers, gas fees, and even staking. Today, Binance and BNB chain are technically separate. The exchange is run as a centralized company, while BNB chain operates as a community-driven ecosystem where governance is based on token holdings. But let's be real. Who holds the most tokens? Binance. Structurally, these two are separate, but in practice, they are still closely intertwined. And here's the thing. High centralization is usually a bad thing for other chains, but not for BNB. Why is that? Because Binance is the largest crypto exchange in the world with unmatched profitability. In 2024 alone, Binance generated $16.8 billion in revenue. With that level of profit, Binance has no incentive to crush BNB just to make a quick buck. On the contrary, Binance actively supports BNB holders by offering airdrops and extra rewards. So if you're holding BNB, you're not only enjoying price appreciation, but also annual rewards of 10% to 20%. So as long as Binance remains the industry leader, trust in BNB stays strong. Next, let's talk about supply and demand. So BNB's economic model can be summarized in two words: strong deflation. And the ultimate goal, to reduce the total supply from 200 million BNB to 100 million. And there are three main burn mechanisms that could make this happen. First, we got the quarterly auto burn. In the early days, BNB burns were funded by Binance profits. Binance will use part of its earnings to buy back BNB and then burn it. In 2021, that changed. Why is that? Okay, first, it wasn't a regulatory compliant because it made BNB look like a stock tied to Binance profits. Second, because Binance is private, no one knew its exact revenue numbers, making this system too opaque. So Binance replaced it with a fully automated quarterly burn. Now, the burn amount is calculated by a formula with only one variable, the P, which is the average BNB price that quarter. And the logic is simple. The lower the price, the more tokens are burned. The higher the price, the fewer tokens burned. Now looking at the historical data, the burn volume is pretty stable, averaging about 2 million BNB burned every quarter. With about 140 million BNB left, the total supply is expected to reach the 100 million target in few years. Now some people may ask, if so many tokens are being burned, whose tokens are they? Who is paying for it? Well, the answer is, most of the tokens burned come from team wallets, primarily those labeled Token Hub. In other words, these aren't tokens being bought off the open market. They are team-held tokens being destroyed. And that means it doesn't create new buying pressure on the market. And the benefit is that the team's reserve shrink over time, but it's not the type of buyback-driven deflation that pushes prices higher. Second, real-time on-chain burns. So this mechanism also launched in 2021, and here's how it works. Every transaction on the BNB chain charges a gas fee. Between 10% and 20% of that fee is burned instantly, while the remaining 80 to 90% goes to validators staking BNB. Over the past year, the chain collected $200 million in gas fees, and at a 20% burn rate, that's $40 million worth of BNB burned. But compared to BNB's multi-billion-dollar market cap, that's only about 0.04% deflation. And where things get interesting is the validator rewards. So on Ethereum, you only need 32 ETH to run a validator node. But on BNB, you need to lock up 30 million BNB, an insanely high bar. As a result, there are only 29 validators and a handful of standby nodes, about 45 nodes total. That means the validator rewards mostly go to the largest whales. And if you expand the holder list to the top 10 address, you will see they control 97% of the total supply, leaving just 3% for retail investors. So while the real-time burn only contributes about 2% of annual deflation, it further consolidates token distribution into low liquidity whale wallets, reinforcing price stability. Now third, we got special burns. These are one-off events. For example, in 2021, the BNB token hub was hacked. As part of the response, over 1 million BNB were burned to protect the ecosystem. And these cases are rare, but worth nothing. Alright, now that we have broken down trust and supply demand, we can understand BNB's past price performance. But what about the future? Right now, there are two major developments you need to watch. The first one is institutional buying. So BNB is starting to mirror traditional finance by linking corporate equity with token accumulation. Let's take the BNB network company BNC for example. So Binance Labs invested $500 million in its private round. On August 10th, BNC announced it bought 200k BNB, about $160 million worth at $800 per token, through OTC deals and market buys. If you look at the charts, the big price move on August 10th was clearly triggered by this buying. And remember, that purchase only used $160 million of their $500 million fund. And their goal is to accumulate 5 to 10% of BNB's circulating supply. And as they buy more, their wallet address will eventually be identified, and we will have a clearer picture of their market impact. And there's BNB Corp, supported but not led by CZ, as well as WINT, a biotech firm, and Nanolabs, a mining company. All of them are transitioning into token holding entities. Combined, this institutional demand could be significant. And the only downside? Unlike Bitcoin or Ethereum, BNB doesn't have a spot ETF. So traditional institutions have fewer regulated channels to buy. For now, the only big name we have seen publicly is Pantera Capital, which participated in BNC's private round. Still, with traditional finance money flowing in and Binance's tight control of supply, future price appreciation looks promising. Second, Binance expanding business. So Binance itself continues to evolve. After its early growth during the unregulated days, Binance solidified its #1 spot in the industry. Now, as crypto regulation opens up globally, Binance is entering a second growth phase. After settling with the SEC, Binance went on the offensive, securing a $2 billion investment from the Middle East and even leveraging the Trump family's USD1 token to handle incoming funds. And this marks the first time Binance has integrated real-world assets for yield, signaling a clear shift toward compliance and deeper integration with traditional finance. And BNB naturally will benefit from that. But of course, BNB isn't without risks. First, its dependence on Binance. If anything ever happens to Binance, BNB will be the first one to take the hit. Second, its lack of a strong developer community. According to On-Chain Foundation data, BNB has only 389 active monthly developers, far fewer than Ethereum or Solana. And its ecosystem isn't as vibrant. And if Binance shifts its strategy, on-chain activity could decline further. So BNB is like enterprise stock in the crypto world. Pros, stability, resilience, and strong price control. Cons, heavy centralization and reliance on Binance. If Binance ever lets go, it would trigger a black swan event. Alright, this is the full story of BNB. BNB has not only survived, but thrived. It's growing fast while others come and go. So, what do you think? Is BNB the most stable protector of the crypto market? Or is it just the most centralized coin with hidden risk? Drop your thoughts in the comment section. And if this video helped you understand the truth behind BNB's price action, don't forget to leave a like and share it with your friends. In this market, knowing the logic behind price movements is the only moat that keeps us alive. See ya!